I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. And as institutional demand progressively moves into the market, I think that is the dominant theme. And that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K.
In the current crypto landscape, sentiment has rarely been this divided. Retail traders on crypto Twitter sound defeated. Bearishness and exhaustion dominate the conversation. But behind the noise, institutional investors are calm, confident, and quietly accumulating. Matt Hougan, Chief Investment Officer at Bitwise, describes this split as the defining signal of the next market phase. Bitcoin may be drifting sideways around 100,000, but for institutions, that's a gift, an opportunity to build strategic exposure while retail capitulates. Hougan believes the market is transitioning from its speculative retail era into a more measured, institutionally driven cycle. This shift will bring slower but steadier gains, where fundamentals matter more than hype and portfolio construction replaces emotional trading. As retail sentiment hits bottom, institutional conviction is quietly rising. And that's often how major bull markets begin.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
If you're talking about retail crypto Twitter, there's extreme levels of bearishness, extreme levels of even depression, I would say. If you're talking about institutional investors, there's relative excitement and no panic at all. They're looking at an asset that is up significantly on a 1-year basis. I think Bitcoin's still up 30% over the last 12 months. They still see it in a bull market. They're still buying. So institutions are looking at this more with like sort of a calm opportunity. And I think crypto retail sentiment is really down at the bottom. My own view is that Bitcoin tripping along sideways here around 100K is a gift. I think it's an opportunity to stack sats. I think it's an opportunity to build positions. I think the long-term trajectory is up and to the right. It's just a matter of time until we get there. I think the thing that people are worried about, particularly on the retail side, is whether there are more bodies to surface from the big deleveraging washout and sort of the concerns around vaults and hacks that we've seen recently. I think either a major body surfacing so people can get that out of their system, or the passage of time, let's say 4 weeks with no major hacks or no major other issues, will help us sort of clear that out of the system. One reason I think crypto retail is on the sidelines is that they're not sure that that process of figuring out what happened during that deleveraging process and whether there were major institutions that were harmed, I think that is continuing. So if we can resolve that one way or the other, I think that would be sort of the bottom of sentiment and the opportunity to rebuild. The other opportunities that I see for sort of positive catalysts is, I think, progress on the Clarity Act in Congress, or rising expectations that we're going to have progress on the Clarity Act, is a upside surprise that's coming to the market, and I think could give us a reason to rally. Similarly, I think if the market starts pricing in the probability of more rate cuts, if we sort of peel backwards from the hawkish tilt we heard from the Fed at the last press release, I think that could give a bid to a market. So whether it's rate cut expectations, Clarity Act, or just retail getting past their worries that we haven't seen all the downstream effects of that giant deleveraging we had, I think those are the things that would sort of signal the bottom and start to push us upwards until the end of the year. I think the market is still digesting it. I mean, I do think that's one of the reasons why sentiment is still so bearish. I think the market is wondering how many people with leverage positions tied up in the market still have to unwind those positions. I think they're wondering if any major institution took it enough on the chin that they'll be severely challenged. I think the answer to those questions, for what it's worth, are there is still some unwinding and deleveraging that needs to happen, and some small hedge funds that probably are being wound up and need to be moved out of the market. I don't think there is a major institution that was severely enough damaged not to make it through, but there's certainly a risk of that. And I think people just, it's hard to know, even for someone in my seat, which has the benefit of having a lot of contact with these type of firms, it's hard to know if we've fully gotten to the bottom of that. And I think that uncertainty is what's contributing to maybe retail sitting on the sidelines and not buying this dip as aggressively they have previous dips. Look, I think the expectation around an alt season should be one of differentiated returns. I think the era where alts all rose together and any alt was a good alt and the more risky, the better during bull market blowoffs is no longer the case. And I think you can see a little bit of this in the relative flows we're seeing between, let's say, the new Solana ETP and the new Litecoin ETP, right? People are differentiating on what they're more excited about. And I think that will be true going forward. We're going to see a lot more quote unquote altcoin ETPs. Some of them will do exceptionally well. And I think they'll be driven by strong community interest and strong fundamentals. And some of them, I think, will fall completely flat. I think we're just going to see a broader dispersion of returns in alternative assets as we move from the speculative phase of crypto to a more fundamentally driven phase of crypto, from the retail driven phase to the institutional phase. I think that means more distribution, more differentiation, and an era where fundamentals matter more than they did in the past. I think it will be slower and grindier, but still a lot of significant upside. To make that comparison between sort of retail OG investors rotating out and institutions rotating in, you could give the example of like tech stock IPOs. Jordi Visser wrote a great piece about this. You could look at Facebook's IPO. Facebook IPO'd at $38 and then traded down for 15 months before it got back to $38. Today it's at $635. What does that tell you? It tells you once you work through this distribution phase where the early insiders sell to some of the institutions, there can be enormous amounts of upside for those that hold to the other side. So I would, my word to retail investors is like we're at inning like 3 of Bitcoin's growth. We're at inning 1 or 2 on ETH and Solana. We're in the pregame for some of the other more interesting alt assets. There is still a lot to go after this handoff. It's just going to be different than it was in the past. It's going to, I think, look more like a ladder and less like a trampoline. But that can be great for your portfolios as long as you have the right time horizon and as long as you have the right portfolio sizing. There's still a lot to go. It's just maybe less volatile than it was in the past. I think the reasons we had the 4-year cycle are just no longer as relevant, right? The halving is half as important as it was 4 years ago. Interest rates are going down. They went up in 2022. They went up in 2018. So they're working in a different orientation. Blow up risk is lower this time around than it was in 2022 with FTX, in 2018 with ICOs, in 2014 with Mt. Gox. So the reasons we historically had those resets on a quadrennial basis are just either inverse or no longer very relevant. At the same time, you have this institutional bid. If anything, I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. And as institutional demand progressively moves into the market, I think that is the dominant theme. And that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K.
Hougan argues that today's bearish retail mood reflects uncertainty over lingering leverage, small fund liquidations, and fear of hidden contagion. Yet, institutions see none of that as existential. The deleveraging cycle is nearly complete and systemic risk appears limited. Instead, they're focused on macro catalysts. Potential rate cuts, progress on regulatory clarity through the Clarity Act, and a softening Federal Reserve stance, all of which could reignite crypto momentum. Hougan also highlights a crucial structural change, the end of the synchronized alt season era. From now on, altcoin performance will diverge based on fundamentals, community strength, and institutional demand. We're moving from a speculative phase to a professionalized, fundamentally driven market. Bitcoin, Ethereum, and Solana become core digital assets, while weaker tokens fade. It's a maturation process. Less like a trampoline, more like a ladder, but one that climbs persistently higher.
Well, I mean, look, I think the market has it wrong on future rates. That's a big thing to say for me because I think I trust in markets a great deal, but I think it's very short-termism. I think the Trump administration wants lower rates. I think they've politicized the Fed. They want to install a new Fed chair that's going to be more dovish than Powell is. Maybe for December in the existing Fed, we've come down. But I suspect that this economy wants to run hot and we're going to get lower rates in the future. So for a risk asset like Bitcoin, which retains some risk asset characteristics, I think that's a positive catalyst that isn't reflected in the market. The administration wants lower rates we shall have. And I suspect that's the direction of travel. We look at sentiment, which has entered extreme bearishness territory. That's probably the dominant factor here. We use qualitative sentiment around what we're hearing in the market. That's why I think there's the potential for another a little bit more softness because the market hasn't fully accepted that we've moved past that deleveraging moment. But I think sentiment is a good place to look, probably the best place to look. As retail sentiment really gets to deep, there you go, it's already in pretty deep fear. Maybe if it gets into that red category, that will mark the bottom. Maybe, a handful of influencers giving up on publicly on crypto Twitter. You always love to see
I'm
that
almost
as
in
well.
that camp, man. I'm almost in that camp. It's just like, okay,
Dude, fold it in so we can get higher. I think 100K, don't look past the simple fact that 100K is a big round number and people like to sell around big round numbers. I think once we get past the people wanting to sell around 100K, then we're going to see the market going up. Look, we're in a market right now where the market aggressively punishes bad news and ignores good news. And that's a classic bear market. Eventually, we'll get to the point where the market is sort of numb to bad news. You'll see bad news happen and the market will trade sideways. You'll see the market start to reward on the margin good pieces of news in crypto. That's the moment that the cycle has switched. And maybe we start to run away from this 100K number. Again, I want to emphasize that from my perspective, I've come to view this sideways chop as a gift and not a challenge because it is giving us the opportunity to build up positions. I think going forward, people's allocation to crypto will be larger than it is smaller. I don't think this is the death now. I just think it's a phase shift in crypto and ultimately it resolves to the upside.
In Hougan's view, the traditional 4-year Bitcoin cycle is fading into history. The old reset triggers, exchange collapses, over-leveraged blowups, and post-halving speculation are far less relevant today. What replaces them is a longer institutional cycle, potentially spanning 5 to 10 years, characterized by steady inflows, lower volatility, and sustained upward drift. Bitcoin's current consolidation is not a breakdown but a transfer of ownership, from retail hands to institutional balance sheets. For disciplined investors, that's a rare strategic moment. As Hougan puts it, sideways price action is a gift, not a curse. A chance to accumulate before the next structural revaluation. Once markets become numb to bad news and begin rewarding positive developments again, the next leg higher will already be underway. The message is clear: the institutional era has arrived, and the patient will be rewarded.